Churchill is right. Don't be complacent. I mean, you've heard the myopia situation around Kodak, where they were blinded by their own success and actually didn't see digital photography coming in. Don't be blinded. Experiment. Experiment with new business models. And I think you have heard about embedded finance. I mean, we've spoken about BNPL, buy now, pay later. There's other models in specifically in retail, investment, in all the different areas about embedded finance. And I'll talk a little bit about some of the examples a little bit later. Explore, experiment in different technologies. You heard a lot about blockchain. There's also quantum computing, and yes and no about the security issues around quantum computing. There's digital currencies that was referred to in the last few days as well. But also embrace the complexity that comes with this experimentation and fail fast with the objective to actually learn as part of the experimentation. Not compliance, but discipline. Most people want to avoid pain, and discipline is usually painful, says John Maxwell. You are going to expose yourself when you experiment, but manage your risk. You're still a financial institution, part of a bigger economy. You have to think carefully about your risk. Be entrepreneurial, but take carefully considered risk as part of that. I know it sounds counterintuitive, but you are part of a larger economy. Be disciplined about it. The last one is not contract, but trust. You can't connect the dots looking forward. You can only connect them looking backwards. So you have to trust the dots will somehow connect in your future, says Steve Jobs. Invest to avoid the valley of death. I know that sounds like a song. I'm not going to sing it here. I know there's some rap stars in here. But you have to invest financially to adapt, to evolve, to respond, or you will be disrupted. Be critical around what you invest in, though. Because you've experimented, think carefully. It could be venture capital that you're investing in. It could be advanced technology. It could be new business models that you have experimented and you've learned how to do this and what to do. It can be overwhelming with the complex adaptive system. So it's a complex system that needs to continuously adapt. And in so doing, we need a set of behaviors and conditions in order for innovation to be self-regulating. It needs to be self-regulating. I need to stress it again. It has to be self-regulating because then you will constantly adapt to any change that comes in. You would have a value system of ideation. You want curiosity from your people. You want to co-create, so have a network of interactions in order to influence. You want to have speed of execution. You want to measure using OKRs. And you want to be able to have agility to renew, adapt, and respond. That sums up the second part on how do you respond to this fast changing landscape and the pace that you are constantly in all the time. I have 2 slides left and then I'm done. So innovations in Africa, I think we've spent quite a bit in the last 2 days around what's going on. But according to the McKinsey study, Africa is regarded as the world's second fastest growing and profitable payments and banking market after Latin America. And we should actually be proud of that. And it'll continue to attract investors, not when we have load shedding stage 6 though, so that doesn't help us, for their growth opportunities. Africa is already a global leader in mobile money transactions, and I think some of the speakers said it earlier as well. And we're getting more and more lending apps emerging by fintechs offering instant credit as an example. But from a consumer perspective, what research is showing is that consumers are more online. I think I said it earlier. They actually are seeking for individuality through personalization. They're seeking for control of purchasing experience. And they also want communication to be constant. So self-service and immediate response. How are businesses responding to that, as an example? Well, they're putting the client at the center and they're building ecosystems around those clients. They're diversifying their portfolio around what are they going to offer those clients. So they're moving beyond banking and banking products, going into insurance, going into telecoms, etc., building that ecosystem and offerings to the client. I think there's also an aspect around client intimacy. So the whole personalization piece coming around, that's how businesses also responding to that. Some high-level themes around innovations. Now, I can stand here and I can talk about security, but we've had that discussion, but I'm not going to talk about that. I'm just going to talk about 5 things at a very high level. You've heard a lot about payments. Payments is pretty hot. There's this drive towards instant cardless, different payment mechanisms, coupled with digital currencies, move towards cashless. What is the future of money? We heard a speaker earlier today as well. So the combo of those two, you would know, being in the banks, being in fintech, being a regulator, we're already dabbling in a lot of that. So there's Project Dunbar, if you're not aware of it. There's cross-border settlements. They're experimenting with blockchain, using CBDCs, central bank digital currencies, as part of that. And South Africa, the Reserve Bank of South Africa, Singapore, Malaysia, and Australia are participating as part of that experiment with blockchain. You would have known about Project Kolka. I think we're in phase 2 at the moment. Those are domestic payments. That's currently, we're experimenting with blockchain there. We're in phase 2 of that. And that's handled by that's working with the Reserve Bank. There's the rapid payments program that we're looking at the aging rails, but on the low value side. And this is the revamp or the renewal of those rails. You've got fintechs like MFS Africa, Jumo, playing against like MasterCard and Visa as well. So, but I think what I want to stress around the payment side is the use of the technology, which is blockchain. It is power in itself. I don't want to say a Standard Bank term, cheaper, better, faster, because it's not about that. It's actually about it being cheaper. It is about being better. It sounds like I am going to say that now. It's about being immutable. It's about the speed. It's about everything that comes with that technology. And there's power in that technology. And you're only seeing it from a payment side. But I think we had a speaker earlier on today talking about the documentation side of things. The power of the use around KYC and AML. But you can't do it alone with blockchain. It's a distributed ledger. And there are other distributed ledgers out there as well. You've got DAG, you've got Hashgraph, you've got all those distributed ledgers. Blockchain is the most dominant one in the market at the moment. And there is power in that technology. It's about experimenting and how do you use it. But you can't do it alone, as I stressed. If you want to do KYC and AML for a country like South Africa to remove your client remediation that we currently all do as part of a banking industry, to have a single version of the truth using blockchain, there's power in that itself. The digital currencies, so it's also hot around a cashless society and how to use digital currencies. We heard about crypto, very volatile. I'm sure all of you would have lost the money. Great conversation yesterday afternoon around the panel discussion and how they feel around where the future of banking is going with no banks. Absolutely respect your candidacy. I'll reserve my judgment because I'm not part of the debate. But you've got crypto, you've got stable coins being asset-backed, much more stable in the word stable coins. You've got CBDCs, also central bank digital currency, and we're exploring with all of those, or experimenting with all of those as part of the blockchain technologies. Then you've got banking as a service, open banking, and banking as a platform. So banking as a service is about leasing your assets, providing it as a utility in the market. I think I spoke about Goldman Sachs. They actually offer transactional banking via APIs as banking as a service. Why don't you consume that in your environment? Embedded finance is also offered as a service. So it's called banking as a service, but you can do trade execution as a service. You can do prime services as a service. You can do many things as a service, right? So you would have heard the partnership between PPS and Standard Bank. You would have heard the partnership between MTN and Sanlam. You would have heard the partnership around Sanlam and Capitec, all in the context around embedded finance. Open banking, I think someone won a book earlier around the fact that it provides third-party access to data for new revenue streams, for innovation, that you can open up your estate. Actually, from an Investec perspective, which is public knowledge at the moment, we actually partner. So we've opened up our estate as part of open banking. we've actually got programmable banking. So we partner with OfferZen, which is a dev house, actually to try and innovate using programmable banking. So you can program on your bank card, as an example, as a private client or as a corporate. We've opened up that. We also have a partnership with OneCart where they actually have a corporate card with us, and they can program those cards themselves, as an example. So they have their own partnership with their retailers. They program their cards to only work at specific retailers, only to have specific amounts on those cards, etc. They can do it themselves. We don't have to do it for them. We've just opened up our estate using APIs. They consume it and they program it themselves. We've got other partnerships as part of open banking. So we bank medical practitioners, and they've got a software called Astrocyte. They can pull in their transactional history from our APIs into their software to see their full transaction history flow. And then you've got banking as a platform. So building out this ecosystem around the client, the idea is to diversify what you offer the client. So augment your capabilities, and you can plug in third-party services into your platform and offer that to your client. The digital humanization piece is a very fancy term. It's actually about the personalized experience. It's about proactive recommendations. It's about conversational AI. You heard a lot about that as well. And then obviously there's a question mark around future of banking. We've moved from traditional banking to digital banking to open banking and beyond banking. And then we speak about decentralized finance. And we're not there yet, taking away the intermediary, the central bank, the banks, the credit unions. It's a question mark, right? Again, I'll reserve my judgment around where I think we're going with that. And then I didn't hear anyone talk about some exciting stuff. We don't know if it's real or not, but metaverse banking. Are we going to do that? Are we not? Not sure. But the future of banking is a question mark. The future of money is a question mark. The evolution of payments is a question mark. There's a lot to think about in terms of innovation. And then my last slide. With change comes the social impact. Alvin Toffler, in his book called Future Shock, states that the accelerated rate of technological and social change leaves people disconnected and suffering from shattering stress and disorientation. It creates social confusion. Decision-making breaks down. The feeling of being marginalized. It's all an emotional feeling around the change that you face and you have to consume all the time. But he says this: you must prepare to embrace the change through learning, unlearning, and relearning. Thank you.